Hello and welcome to BloombergQuint. My guest today is Mr. Dilip Gaur, Managing Director of Grasim, and Sushil Agarwal, Director Grasim and Group CFO. Gentlemen, thank you for joining us on BloombergQuint. Let me begin with the margin picture. You've seen a 200 basis point jump in margins, EBITDA margins in this quarter. Give us an idea of where this margin jump is coming from.
Yeah, I think we have two core businesses on standalone, that is VSF and chemical. I'll take VSF first. I think the margins have come, one from the global markets have held on. So there has been an improvement in realization by about 2% YOY, about a percent quarter on quarter. But more importantly, it has happened on the cost side of it. So we have had very good cost management, which has given us a better margin realization, and the volumes. I think our volumes have grown 9%, and largely because of debottlenecking. And the debottlenecking, as you know, came at a much lower capital cost per ton. So the variable margins from the debottleneck capacity is much higher than the core capacity. So this together added to the significant margin expansion in VSF. In the area of chemicals, I think the eco realization for the caustic soda was very good, and the good thing is the chlorine turned from negative to positive. So the chlorine had a swing of almost 4,000 rupees per ton.
Okay.
So overall, I think the chemicals margins and VSF margins both are very healthy.
Mr. Agarwal, this margin at 24%, is it sustainable? How much of the debottlenecking which Mr. Gaur said would be sustainable? And and do you see any external headwinds coming in terms of input prices, input costs which coming in? Will that disturb the entire margin picture?
So thanks, Sajeet. First of all, I think that's the best ever quarterly result for Grasim. At a standalone level, we have reported the best ever result in the Grasim's history, and both revenues, EBITDA and PAT is the highest ever for Grasim. Both our businesses, as Mr. Gaur was explaining, have done extremely well. There has been a cost pressure, but what we are doing is, as he was explaining, that the volume and the various initiatives which we have taken, and the expansion which we are doing in the capacities, that's actually is helping us, and margins broadly in our mind should sustain around 20% is going forward as well.
You spoke about expansion plans which is coming in. Understand the board has approved 1100 crores of capex plan for FY19. So a bulk of that would be, I assume, that in the next 3 quarters, because from year to date it has been some 300 odd crores capex which has been done by Grasim. How do you going to fund it? All internal accrual?
So I think there are a couple of ways I can answer this questions. So one, the Grasim balance sheet has been very, very strong. We have a strong free cash flow generation. Currently, as of June 18, we have a net surplus cash of over 700 crores on our balance sheet, which has grown by almost 400 crores.
Net surplus cash.
Net surplus cash, which has grown around 400 crore rupees from March 31st to June, and that is post the capex which we have incurred during the quarter, which is around 300 crore rupees. Okay. And you mentioned about that. So clearly, company has a strong free cash flow generation, and as we don't have debt on the net basis, debt on the balance sheet, we believe that all our expansion which we have planned at a standalone level, total number is around 7,500 crores.
Yes. How do you going to fund that? That was my second question.
So the entire capex actually gets spent over a period of next 2.5-3 years. Yeah. And as we have a net generation at a free cash flow on a quarterly basis, after our capex spending, I think we'll be able to support or spend those capex out of internal generation itself.
If I see the breakup of the capex, which is around 7,500 crores odd, 3,000 crores is for FY19 and 4,000 odd crore is from FY20 onwards, which has been done. What is the kind of free cash flow that Grasim would be expected to generate in FY19?
So I think if you just look at first quarter number, before capex, we would have generated a free cash flow of around 700 odd crore rupees. So if we just multiply by 4, closer to 2,800, 2,900 crores cash we will generate, and which will take care of the spending which we have planned for the current year. Although we still we have a surplus opening balance. So I think
there's some capital work in progress as well for you, right?
Yeah. So in our mind, all these opening cash balance plus the strong generation which we have, we'll be able to kind of fund from our internal generation itself.
Mr. Gaur, there is a capex program under works, and that will come into, you'll start realizing the capacities coming in. What is the kind of revenue growth do you see by FY19 end?
See, the capacity expansion which we are targeting will be 40%. So presuming that it is difficult to predict what the realizations will be, but at the current level also, we can expect a 40 to 50% growth in our revenues.
But when the capex program gets over, and this is you're saying by the end of FY 2021, 2021, which will happen. On the VSF front, we've seen strong firm prices for VSF globally happening. How do you see the environment for VSF there? It's been helped by the fact that cotton prices have been relatively firm internationally and in China, and so that's creating a good demand for VSF within the country. Where do you see demand picking up for you, whether it's in domestic market or international market?
Yeah, see, it's very important to understand the interfiber dynamics when we talk about VSF, because there are 3 core fibers. There is a viscose fiber, there is a cotton, and there is a polyester.
Yes.
And I think it depends on relative pricing. It happens that there is a shift happens. Now, going forward, the cotton prices are expected to remain firm because the cotton availability is an issue, because cotton is very land intensive. And I think second, the polyester prices are going to go up because of the petroleum prices going up. So there is enough headroom for the VSF. So I think all the interfiber dynamics augurs well for VSF pricing to remain strong. What is a deterrent is the excess capacity coming into China.
That's
so
right.
somewhere I think it will balance. So
what is the kind of capacity which is coming up in the next 12 to 18 months?
About 800,000 to 1.2 million ton is what they are talking about. The capacity was supposed to have come on stream last quarter itself, but they've all got delayed. So I think between what one is planning and what is actually happening on the ground is a little different.
So you're going to see some kind of softness in VSF prices once those capacity coming in, and that could be towards the end of the year.
But the issue is there are 2 things in that, because the Chinese costs also are going up, so the break-even point is going up. So the ability to bring down the prices to a level also has come down. What we believe is the break-even cost of 14,600 RMB.
Yeah.
So that is the kind of floor one can expect, and at that floor, I think the prices could be pretty healthy because of the currency movements. The Chinese currency has got devaluated significantly. The dollar has become stronger. So end to end, I think those are viable pricing levels for the viscose business.
Do you see that posing any kind of challenge coming in for Indian markets? From the China point of view?
No, as
new capacities come in, there may be a chance of those getting imported into countries like India, right?
So currently also there has been some imports from different part of the globe, and I don't think any import will stop. And given as you was mentioning that the whole cost structure itself has changed. In my mind, I think that will drive how much prices will eventually fall. Although there are capacities coming in, and any business, any industry, whenever there are a large capacity gets put in, there is going to be some impact on the pricing.
And what is the kind of demand you're seeing for VSF in India, in domestic market?
In fact, the VSF demand is very robust and very good. In fact, we are growing in double digit. Last 4 years, VSF in India has grown at 12% CAGR, and we expect this to continue. The demand from the textile segment is very, very strong, and we are seeing a shift from cotton to viscose as well. So I think, as I said, this year, in this quarter, while you are seeing 9% overall growth, the domestic consumption grew by 31% year on year.
And that's sustainable?
No, that I think that is one off because there was a GST impact also. But
Okay.
I believe a double digit.
So that's an aberration we are saying basically.
Yeah, but a double digit.
What would be the normalized
a
growth?
double digit growth, 10 to 12%, which is twice the textile industry growth.
So means you will see the effect of the volume growth or happening in the Q2 as well, because we saw GST disruption going into next
in fact,
2
all
quarters.
our plants are running 100% capacity. We are full.
On the caustic soda front, sir, Mr. Agarwal, we saw caustic soda prices also going up in this quarter. What is the kind of guidance you have with respect to how prices are looking for caustic soda?
So I think we should look at the ECU pricing, which has a reflection of both caustic as well as chlorine prices, and we believe that in the current quarter, because the chlorine prices have improved a bit, the ECU has been a particular level, and going forward also in our assessment, the ECU should be at a current level what we have reported in this quarter.
And you see sustainable in the coming quarters, in the sense for the full year, we don't see any kind of impact happening from global, because globally prices have remained firm, but you don't see a trend where suddenly you going to see some kind of dip in prices happening.
So the way we should see is one is additional new capacity at a global level. We believe that there are no new additional global capacities are being added. And demand actually has been very robust.
Okay.
So underlying demand for our part of chemical is textile industry, the alumina based industry, detergent and that side. So all those industries are kind of growing at a reasonable pace, and which is where we believe that the demand of chlorine and caustic would continue to remain strong. And as we talked about earlier, the board has announced additional capex of 1100 crores for caustic soda capacity at 2 of our existing location, as well as a specialty chemical, and the specialty chemical is actually part of chlorine uses. So because every ton of caustic which we produce, almost 0.9 ton of chlorine gets produced as a byproduct, and we want to kind of make sure as a company that we have plans for use of chlorine strongly, so that caustic soda production can be increased.
So by the end of FY19, to put it plainly, you're going to see demand to be robust double digit, because first quarter was an aberration for domestic market. But over a period of FY19, it's going to be robust double-digit growth, and margin could be maintained at the same level if prices remain firm. That's the kind of guidance which you're looking at.
I don't think we want to leave a message with too much of a guidance on specific numbers. So what we are generally of the view that the ECU realization should remain strong. The underlying uses of that caustic industry, there is a strong growth demand, and given those two things, and we are a very cost conscious organization, because of that we believe that margins should remain healthy.
Specialty chemicals is something which you've been of late focusing on increasing. It's a high margin business as well for you. How do you see that panning out? Do you see more and more revenue contribution coming in from that segment?
Yeah, in fact, that's one of the part of our strategy, that we want to maximize the specialty portfolio. In case of Grasim, it is about 31 to 32%.
Yeah.
And idea is to go to 40%. And the good thing, whenever the commodity prices go down, the delta for the specialty goes up.
Yeah.
So it's our focus to grow our specialties like modal, and we are also going to come into third generation fiber by the year end. So I think we are going to fortify our specialty portfolio more and more as we go along. That's one part of our strategy to make sure that the business remains sustainable and the margins remain healthy.
And what about the 40% target? When do you expect that coming?
I think the way our plans are, by next year we should achieve 40%.
Liva is one important product which you have, which is more retail oriented one. What's the update there you have?
In fact, Liva has been a really pioneering initiative, and it is all the growth which I spoke to you, double-digit growth in India, whereas the global markets are growing at 6%, is thanks to Liva. I think Liva has been able to create new solutions with viscose, which were never thought by the consumer. We are now getting new applications. We are getting a shift from other fibers to viscose fiber, and we are going to new categories. So I think the Liva has been a very successful experiment. It is now present in more than 3,000 stores, and 33 brands are collaborating with us on growth of next year.
Are we seeing good demand coming from tier 2, tier 3 cities for Liva?
Exactly. So the thing about Liva is the rub-off into tier 2, tier 3 is very huge.
Okay.
So because once the designers start picking up, once the stores start picking up, I think the ripple effect goes into the tier 2, tier 3 cities. And we are seeing more than 300 to 400 tons per day of viscose sales happening because of an indirect benefit from Liva, which was not there earlier.
Okay.
So looking back, when we started this initiative, Indian demand was 500 odd tons per day. We are now 1100 tons per day. So that's the kind of growth Liva has given us in 3 to 4 years time.
And it's growing at a fast rate.
It's sustainable. I told 12% CAGR year on year.
You know, my final question to you is on, you have laid down your capex plan, nearly 3,000 odd crores for FY19 and 4,500 crores for next year. You also hold a shareholder in Idea. The merger is expected any time, which is happening. Will Grasim be looking at infusing some kind of capital into Idea at some point? Because in the past you have said you will not be investing more. So I'm just reiterating my question: is there a change in strategy of looking at investing in Idea going forward?
So what we said earlier was that Grasim will continue to kind of maintain its own share in telecom business. Post-merger, the Grasim shares in the Idea company would be around 12.5%. So we don't have any specific plan from Idea. In case if they raise any capital, where we as a one of the shareholder will participate to the extent of maintain our share.
So there may be an infusion. If there is a capital infusion required, you will maintain your shareholder holding at that level, and the infusion would be to that extent.
Yeah, that's what we had said, and we'll continue to kind of maintain that same strength.
Gentlemen, thank you very much for joining us.
Thank you so much.
Thank you.
Thank you.